I really like semiconductors because they are the foundation of productivity. And they are the thing that, makes us just interconnect with each other. And, they are productivity. And that's really what this angle is. And they've gotten hit hard and fast due to this trade talk thing. But without them, we can't function. So that's where I would look for value.
Would you be buying the whole index, like an SMH, or specific names?
I'm more fond of specific names. Some of the semis are probably overpriced. If you just look at the multiples and go down, you get to Intel, which is trading at about 11 times forward earnings. So would start there.
All right. Mark, Goldman is out there today saying to place services instead of goods-making companies. So that would favor an Amazon, for example, better than a company like Apple. What's your take?
Well, if you look at the FANG stocks, Facebook, Amazon, Netflix, Google, their exposure to China is probably on average less than 2% and maybe less than 1%. I mean, near term, that's a positive. Long term, that's a negative. These companies would like to have greater exposure to that market. So, they'll trade off on sentiment. But the selling, the extent that those stocks are selling, it's really for indiscriminate reasons rather than a country-specific exposure. The two stocks that we particularly like right here are Facebook, based on valuation and a fundamental setup in the back half of the year. It's also the cheapest stock on a PE basis. And then Netflix, which we think is going to be an accelerating revenue growth story with a really great franchise that's going to come out July 4th. That's that Stranger Things, the next season of that. So the product pipeline, their kind of product pipeline, title pipeline, looks really solid. Those would be our top two picks right here. What
about Apple? Mark, I'll ask you first. They're the one, obviously, even if you go with Jim Cramer's ABCs of exposure to China, it's Apple, Boeing, Caterpillar. So Apple, in terms of big tech, does seem like, is it the riskiest one in this regard?
Well, I may punt a little bit on that. I don't directly cover Apple. So relative to the names, the tech names I look at, it's clearly got dramatically more exposure. I just would ask investors to think about, is this the long-term trade or the short-term trade that you're in? Sure. And I think generally I look at a sector that doesn't have exposure to China and really wishes it did have a lot more exposure. So that's the only context I'd give you.
And ironically, benefiting from that right now. All right, so Kim, same question to you. What about Apple, and where else would you look if you didn't want China exposure?
Well, that's kind of tough because if you're talking technology, and at least the kind of technology I really like, which is enterprise focused, it's really a worldwide phenomenon. But I suppose you could, Apple probably isn't that in that category because they do have some exposure to to China, and it's not been a great place for them recently. So that's part of that problem. So maybe something like Microsoft, because again, it is more services now as opposed to,
device.
Devices. But that's where it would look. But that it looks pretty rich at this point. But any kind of not consumer, but enterprise software is where it would look.
Sure. And I also see here you like Westinghouse, Air Brake Technologies, maybe even a VFC Corp. So some other ideas for those looking.